Hey, Justin, how are you?
Doing great, Jeff. Thanks for having me.
Well, thank you for joining me on Indispensable Appraisers podcast. We haven't really met, so you want to tell me what you do, Justin?
Yeah, sure. So I actually run two businesses. I run a commercial real estate appraisal firm known as Gohn Company, named after me. I've been around since 2006, this company, and it's changed a little bit over the years, Jeff. You know, in the beginning, I did primarily bank work. And then slowly, probably about 3 or 4 years into running my own shop, I started taking on more and more. I would guess you would call it litigation support stuff, whether that's for tax appeal or condemnation or any of the million reasons why people decide to sue each other over real estate. So I started to do more and more sort of litigation support work. And I would say now that's a majority of my business, although I still have a lot of banking clients. These are people that are very important to me, very long-term relationships, and that's still important work that I still do. And then probably about 6 years ago, and you and I talked about this a little bit before we came live here, I started another company known as OverseasElite. People that follow me and are connected with me on LinkedIn will be familiar with OverseasElite. It's a remote staffing firm. So we provide overseas workers, primarily for American companies. We have a lot of appraisal firms as clients, but most of our clients, just by sheer numbers, are in other business verticals, whether they're software companies, logistics companies. So that's sort of the 10,000 square foot view of what I do with my time.
Great, appreciate that. On the valuation side, where are we winning? What are we doing a good job at?
Yeah, well, listen, it's funny. I was talking with some appraisers recently. I attend a lot of the regional meetings because I'm currently vice president of the Philly Metro chapter. So there was a regional meeting in Lake George, and one of the past presidents, national presidents, was there. He's going to be Craig. He's going to be a future president now coming up. And what I told him, I think our biggest asset. It's funny in the appraisal business. We have all these things that make up the appraisal business. We have the Appraisal Institute's body of knowledge, which is all this literature, these peer-reviewed articles, all these definitions and these terms that we use. That's a big part of the appraisal business. We have all these important topics of the day, right? You hear a lot about the appraisal shortage. You have this whole idea of Korea, which is this program to try to bring new people into the business. Of course, you have the idea of appraisal bias, whether that's true or not. I'm not going to litigate that here, but that's a big topic of the day. And then you have the different legislative bodies and the different organizations. You have the Appraisal Institute, the Appraisal Foundations, the Appraisal Qualification Board. So, when you say the appraisal industry and where are we winning and what are our assets, we have all of these different things, right? Again, we have the body of knowledge, we have the topics of the day, we have these different bodies. But I think the biggest asset we have, and the most important and most meaningful part of the business, it's the people who make it up. Um, the relationships that I've made over the years since I started in the business back in 2002 have been incredible for me. Lifelong friends, people that are very important to me. And then the people I've met over the years, I attend these regional meetings and I attended LDAC this year in Washington, D.C., where I got to meet appraisers all over the world. There is no doubt about it that our biggest asset are the people who make up this industry because it's some of the best people I've ever met in my life, people that are important to me, very smart people, very forward looking people. So, yeah, I think that's our biggest asset.
Oh, great. And where is the valuation space? What are our greatest challenges?
So, and I know you and I touched on this briefly. It's sort of a two-edged sword, I think, where I was just talking about how the people are our biggest assets, right? There's just these amazing people. And, I would say to anybody who maybe hasn't gotten out there to attend some conferences, Appraisal Institute meetings, do it because you're going to go there and you're going to meet some of these incredible people, just very smart, very funny, people that you can count on. But it's sort of a double-edged sword because I would say one of our biggest challenges is there is a large contingent of the appraisal profession that suffer from what I would call, Jeff, sort of a scarcity mindset. People that believe that, well, the pie is only so big, there's only limited resources, I sort of have to get what's mine. And there's only so much money to go around. And, and that can be very damaging because, it sort of thwarts collaboration between people. There's a lot of people talk about whether you believe it or not. Some people don't believe it, but you hear a lot of talk about an appraisal shortage. Certainly, whether or not we have a shortage or not, the number of appraisers is rapidly declining. The number of Appraisal Institute members is rapidly declining. And some people will point to the fact that, well, one of the reasons why that's happened is because obviously new blood hasn't entered the profession. There are people that I've heard say over the years, well, why would I bring on a trainee? I'm going to train my competition. It's somebody that could just leave me and, go out there and be my competition. And that's sort of a scarcity mindset. I had an appraiser, if I were to say his name, and I'm not going to, you would instantly recognize who it was, somebody with a national name who maybe have served on a national level. Years ago, probably like 4 or 5 years ago, I said, oh, you're on LinkedIn. So I made a connection request to him and he called me and I'm like, hey, what's going on? He's like, listen, I know you sent a connection request to myself and he has a business partner and I, requested, connection request to both of them. And he's like, listen, we don't want you to be offended, but we just want to let you know that, we don't connect with other appraisers on LinkedIn because we don't want you to see who our clients are. And to me, this is an idea of that scarcity mindset, because first of all, if you're a business owner, an appraiser, or whatever business vertical you're working in, you shouldn't be worried about people knowing who your clients are, because if you're serving them to the best of your ability, then they're not going to leave you and go with somebody else. You know what I mean? Like I have, clients that are very close to me. I'll put it up on a billboard who my clients are. You can call them all you want. If they end up going to you, well, then that's my fault because then I wasn't serving them the best way. So this is sort of the scarcity mindset. And one thing that I would also tack onto that, there's a great appraiser, and you can see him on LinkedIn, connect with him if you're not. His name's Doug Potts. He's sort of in the St. Louis area. For years, he's been giving seminars and talks about coming up with alternative valuation products. He calls them validations. And these are sort of smaller type reports that banks might be in need of when a full appraisal isn't needed, right? So there's a lot of situations where the interagency appraisal guidelines doesn't require a full appraisal, right? A decision can be made internally, it's certain loan thresholds and certain value thresholds where another appraisal isn't needed. The banks are making those internal decisions themselves, and then the appraiser never sees that work. And that's most of the pie, actually. If you look at all the loans outstanding, it never makes its way to an appraiser. So what Doug wants to do is, well, why not get the appraiser involved in this? It's not a full appraisal, but an appraiser, you could only charge a smaller fee because it's not as much work, but you review, that loan file. You say, oh, okay, well, this was a $200,000 loan. The property was worth $500,000 5 years from now. Based on a brief search of the market, it's reasonable to assume that, the value hasn't substantially dropped. And now the loan is only, it's like a 30-70 loan to value ratio. We're probably okay with not ordering an appraisal here. And an appraiser could collect whatever, I don't know, a $500,000 fee, whatever it is, for doing that. And I wanted to have Doug come talk at our Philly Metro chapter and talk about this. And I got a lot of pushback from some of my colleagues. They're saying, well, we'll just be shooting ourselves in the foot because this is another lower value product. We're not going to be able to charge a lot of money for it. And to me, it's just missing the point because, again, these are decisions that are already being done internally at banks that are just never making their way to the appraiser. So what's the harm of opening ourselves up to that type of valuation product? Right now, we're getting zero. If somebody could make a pretty good business out of that, if you look at the raw numbers, the number of loans that are out there where these decisions are being made internally, you could have an appraiser, with a good mind for business, make a 7-figure business off serving banks, 7 figures or more off serving banks with making these type of decisions. But again, that sort of scarcity mindset comes in. So I think that's very dangerous. The other thing I would bring up, and I don't know if you want me to expound on it now, Jeff, is the idea of how appraisers get our work. This whole idea of legislative fiat. Is that something you want me to comment on?
The appraiser's getting on board with what? I'm sorry.
Well, the idea that most appraisers, right? If you look at the work that they get, okay, and how they make their money, those appraisals are ordered from, and I don't know a better way to say it, there probably is. The reason why those appraisals are ordered is from what I would call like legislative fiat. So, a bank orders an appraisal, from any one of the million, the thousands of appraisers that are out there because they have to. It's required by law. The interagency guidelines say you must order an appraisal here in this situation. There's other situations, I guess, depending on the state where, if it's for a tax appeal or if an appraisal is for a condemnation situation where, say, the state highway is, widening and they're going to, take some property by eminent domain. It's required that an appraisal is done by a certified appraiser to establish the fair market value. There's certainly situations where the IRS will require an appraisal to be done. Maybe it's for, a historic preservation easement, like a facade easement or a conservation easement. So my point is, appraisers, we get a lot of our business because our clients are required to by law. It's not like appraisers, in my opinion, and I guess there's nothing wrong with that because there's other situations in other business verticals where that happens too, but not a lot of appraisers are making a substantial living because people are coming to them because they really want to, and because the appraiser is really solving a problem for them. I gave the example of, for years now, Google has just been printing billions of dollars every year because since the late 1990s, early 2000s, if people need to find information, they go to that Google search bar and they put in a search. Well, Google's solving a real problem for people, right? People are willingly going to do that because, hey, I need to find out this piece of information, and they're solving a problem for them. There's millions of, we talked about SaaS, software as a service, programs out there who legitimately solve problems for business owners and for people. So people willingly go and pay for that service or pay for that software. That doesn't happen a lot in the appraisal business, where people are like, man, I really have a problem here. Let me seek out an appraiser. They usually seek out an appraiser because they have to. And in a lot of situations, I hate to tell you if you're an appraiser out there, but a lot of times the people that are involved in ordering your service don't really want you involved. If you look at a lot of bank transactions, the borrower's not thrilled about spending $5,000 on an appraisal. It's like, oh, why do I have to do this? Now I got to wait 4 weeks for the thing, or 3 weeks, whatever it is. The bank really doesn't want you involved, because from their perspective, is this guy going to kill the deal? Am I going to have to wait another 3 weeks to close this loan? So I think that's a weakness in our business model as well, where we're getting a lot of work because people are required to by law.
That's funny you say that because I think my first podcast, which I did before I had people like you, thank you, was abundance versus scarcity mindset. I think it was the very first one I made. So I appreciate you bringing that up because I do think that's an interesting specific issue for our industry. You mentioned earlier about the guy didn't want to connect with you on LinkedIn. I just find that insane, right? Some people agree this. You mentioned SaaS. I have a SaaS company. You connect, Realwired, software as a service, appraisal management platform. So I get maybe I breathe too much entrepreneurial air, but I have so much appraiser DNA in me. I'm an appraiser. I just, once you get it, once you like it, once you do it for your whole career, you just look at a building and you start thinking of cap rates and, it's a disease. I don't know what it is. But you touch on a point where it always drove me crazy. And especially as my bank customers, as I've gotten to know chief appraisers, and I sell software to commercial fee appraisers. But when I hear firm owners say, oh, I do bank work, and they roll their eyes, it drives me crazy. So first, to your point, regulatory, they have to do it.
Right.
And you've got, I don't mean you, I mean, some appraisers have a bad attitude to their clients that represent 50, 60, maybe more % of their entire revenue. And I get it. They say the fees are low. okay, that's probably back to the fear of the scarcity mindset that you bring up. That's why they're low, is because if the appraisal fee should be 4,000, don't make it $100, right?
Right.
So that is a problem. But if they realized the struggles of chief appraisers, they have a lot of people to keep happy. Their shareholders isn't just appraisal vendors. And when an appraiser calls a chief appraiser, especially when they kind of say, I don't like to do bank work, but yet they call it chief appraisers, especially now when things are slow and are asking for work, that's not helpful. Ask can you do for the chief appraiser. Understand that their shareholders, they're under a lot of different stress. They are appraisers typically, most of them, but their shareholders are going to be the C-suite, relationship
Right.
managers, the lenders. They've got a lot
Yeah.
of people to answer to, and
That's
for
right.
commercial fee owners not to treat their customers incredibly well and not just call asking for work, but say, how can I help you? Can I do evaluations? Can I maybe,
Right.
you mentioned Doug Potts, we created an organization called FIVA, Financial Institution Valuation Advisors, and we had Doug come on and speak
Okay.
about validations.
Great. That's awesome.
And you can hear the inertia of our industry. So Doug has this new idea, and it's kind of met with a collective. Are we allowed to do that?
Right.
Should we do that? Are we going to get in trouble?
Yep.
And I don't know if it's the nature of appraisers where, we tend to be introverted type of people. We tend to be quieter. We tend to be very analytical. Maybe it's to your point, it's the scarcity mindset that we say, no, why can't we do what Doug is talking about? Doug's a very smart guy. It sounds like an entirely new segment of work, and it's kind of met with inertia.
Yeah.
But anyway, I know we're running out of time, so not running out of time, but where do we go from here? How do we make things better, Justin?
Yeah, I mean, I don't think there's really any easy answers. I mean, it's tough because I have more questions, I think, than answers, Jeff. Because you'll hear people of two different mindsets. So let's talk about one of the challenges that you'll hear, which we can't even agree if it's a challenge or not, right? So if you listen to sort of like the top brass at the Appraisal Institute, you'll hear a lot of talk. Cindy Chance, the CEO. You'll hear a lot of talk about the dwindling numbers, the appraisal shortage, the appraiser shortage, and but then there will be people who won't necessarily even agree that that's the case, that there really is an appraisal shortage. There's people will say, well, no, there's plenty of us out there. Just look at the downward pressure on fees. If there was really a lack of supply, then you would expect to see fees going up. So it's I'm not even really sure that, but I guess what I would say is, first, I think we need to identify to all of our satisfactions where we stand on the shortage. Is it a shortage or not? Because nobody has any really great answers for me. So, Cindy, our CEO at the Appraisal Institute, I think she's of the belief that we do. She's out there talking about dropping the college degree requirement. She's certainly in favor of Korea. But then you have appraisers who are very vocal, on LinkedIn recently. Who say, well, no, we shouldn't drop the college degree requirement. There is no shortage. I believe the guy's down there in Florida. Am I going to butcher his last name? I've talked to him before. Ron Oxtal. Is it Oxtal?
Yeah, Ron's a friend of mine. Ron Oxtal.
Yeah, I've talked to Ron. Him and I talk. It's very easy to talk to. Definitely not. He's like me. Like I don't really look at myself too much as an introvert, even though I think most appraisers are. Ron certainly isn't. At least that's the feeling I got from him when we probably had about a half-hour talk. So Ron came out on the other side, and so I guess if we want to move forward, then I think we actually need to know, well, what are the facts on the ground? Is there a shortage or not? Is Cindy right, in this particular situation, or is Ron right? And it's not just Ron. There's a lot of people who believe that it's just made up. There really is no shortage. So that would be one thing. I would like to see us actually get answers to that. And then, if there is a shortage of appraisers, because that would be bad if there was, because if the number is collapsing and the number of Appraisal Institute members is collapsing, then you extend the timeline out far enough, then there is no more Appraisal Institute. Right? It just goes to it goes to zero, and obviously we don't want to have that for the future. So the ways of addressing it. So there's PARIA. Again, I'm not going to get in litigating whether or not PARIA is a good idea or not, but it's certainly a way to make it easier for people to get into the business. The Appraisal Institute, again, under Cindy's leadership, and not just her, but the board of directors, they're putting a lot of faith in the idea that, well, if we improve our education at the Appraisal Institute, if we modernize the education delivery system, better in-person offerings, better virtual, offerings, online offerings, so that we can cut in and take more of the share from McKissick, right? Because right now, from what I understand, they're eating our lunch when it comes to education. If we can modernize that and take the lion's share of the education, then that will help grow our numbers. Now, when I was at the last regional meeting that we had in Lake George in New York, my question was, so basically the idea is, if we improve our education offering and we get more people into that funnel, more people taking Appraisal Institute education, then what'll happen is that will then grow our numbers over time. And to me, I don't know. I mean, that might be a big leap, right? I raised my hand and I asked a question. I said, well, is there an example that you can point to? And I was asking, there was some national board members there and some people from Chicago. I said, has there ever been an example where there's been an organization, any organization, right, that was suffering from membership numbers, and then the way they addressed that is by improving their education delivery system, and then they saw a measurable improvement because of that, right? And there's no example of that ever happening, as far as they couldn't give me an answer. So it seems like we're putting a lot of faith in education will solve this problem, but we can't point to any organization ever actually growing their number through education. So to me, that's a big leap that we're making there. So, I just think I have more questions than answers, but, again, I think we need to get some facts. Is there a shortage or not? And then we could have a discussion starting from there, because I don't know the answer to it. And then listen, when it comes to the scarcity mindset, I don't know what to do there. I can suggest appraisers read any number of books out there, go meditate, walk barefoot in grass and realize that there's an abundant world out there. There's plenty of money to go around. I don't know how to address that.
Yeah. It's funny. I don't want to go against Ron. I call him the GOAT, greatest of all time appraiser. I'm sure you're smart, but he's the smartest one I know. But I also think if you look at the current transactional volume of bank work, so let's say bank work is 60% of a typical appraisal firm's volume, and it's down 40%. So I do think when it snaps back, there will be a more effective portage, at least in supply and demand, or firms that don't have technology. But Ron brought up recertification. And I do think if that was even true, I don't know if it's some rumor about existing appraisers are going to have to take some kind of test to recertify that they're competent. Right. If that really was a thing, I could see a huge drop off of existing older appraisers saying, I'm done. That's right. It. So we're going to be really careful with the existing people and not test. Because again, you have to look at, I don't want to talk about education too much, but I think you're right. Can we teach more of an abundance mindset? Can we change our educational funnel? And I appreciate you using the word funnel because that's entrepreneurial words. That how do you attract the younger generation? Because if we explain how we got into the industry, there's no way a younger person's going to get into it that way. Right. It just needs to be dramatically with or without a college degree. I don't think it's the degree isn't the issue. It's the marketing. It's the attraction. It's the description. It's the leadership of what we do is pretty cool, but we can't communicate that message. We do a very poor job of saying this is a really cool industry. Right. And that's. I think we're gonna have to leave it at that. Any other things you like to talk about, Justin? Or
that's it, Jeff. Thanks for having me. I know you're on vacation now, enjoying the sun and the beach. So why don't you get back to that? Enjoy your family. And this is great, man. I'm glad we had a chance to talk. I'm sure you and I will keep the conversation going off the podcast into the future. So,
Well, thanks for taking your time, Justin.
sure.